So since 1928, the S&P 500 has experienced 21 bear markets, which means 1 in every 4 to 5 years. So these bear markets usually last a little more than a year at 388 days, with the shortest one being 33 days and the longest one being 929 days, which was in the early 2000s in the dot-com bubble burst. So could this be the bubble bursting for us as well in this current time? So during a bear market, many would shy away from any form of investing because there's so much fear, there's so much uncertainty, and there's so much doubt going around, and naturally people don't want to lose money, which is why they do not invest. But on the flip side, if we invest during a bear market, this can greatly give us some growth potential that can bring us additional wealth as we start to recover into a bull market. So let's define what a bear market is. So a bear market by definition is a period of decline of more than 20% in major stock exchanges and prices over a sustained period of time. Typically, these can last between a couple of months to maybe even years. And bear markets are a normal part of the stock market cycle, and in a normal human's lifetime, we'll probably go through 5 to 6 of these kind of bear markets.
Oh God, that's way too many.
So what should you do if you find yourself in a bear market? So here are some strategies for you to consider. So the first and the most important thing is to not panic.
Stop panicking. I'm not panicking.
When a bear market comes in, it's very normal that many of us will start to panic and start to sell our stocks, crypto, or even other assets because we're afraid of them dropping even further. However, doing a counterintuitive thing of not panicking might actually be a bit more of a logical move for us here, because remember that a bear market is usually temporary, with the longest one being 929 days or 2.5 years. And if you're selling all your stocks right now, you realize those losses and might miss out on the gradual recovery. By this moment, some might say,
Cut your losses now and buy back lower.
so definitely you can do that, but this will mean that we are trying to time the market and the best time to buy and the best time to sell, which, let's be real, it's a real job, requires professional skills to achieve what you want to achieve. And this brings us to the next point, which is dollar cost averaging. So we have covered dollar cost averaging many times, and there are some brokers that allow you to do so with stocks and crypto, which I think is really beneficial. In dollar cost averaging, or DCA, it is a strategy of investing a fixed amount of money at regular intervals, regardless of the price of the asset. So by doing so, you can take advantage of lower prices and potentially increase your returns over time. Although everybody knows this, but putting it into action can be
even harder than it sounds.
Because part of you knows that there's a certain asset that's overpriced, and buying it now might not be the best thing to do. But then again, if you could tell the future, nobody will be watching this video right now. So something I'm doing right now is to DCA into Ethereum, but once again, do not follow my stupid moves because I've proven to lose money over the last year, and I'm purchasing Ethereum on a monthly basis, and this allows me to accumulate ETH when I'm staking and get some rewards. But once again, whatever I'm doing here on the video, please do not follow unless you want to lose money like me. So in a bear market, we'll see stocks and other assets at suppressed prices, or some even bottoming out. So Bitcoin was at $40 a year back, and now it's sitting roughly below $20,000. And all these suppressed prices can also present themselves as opportunities. While it might seem counterintuitive, bear markets can actually present some good buying opportunities as well. So if you're shopping around to build a portfolio or looking out for high quality companies that are undervalued due to the market decline, this can be something useful during these depressing times. So if you do enjoy a discount when you buy your stuff, then this might be a good time for you to start shopping.
We got a discount.
So while we're on the topic of purchasing more assets, this brings us to the next point, which is staying diversified. There are many different financial instruments available in the market, and the ideal portfolio is to have a good mix of each type of asset, which will allow you to enjoy some upside during the good times, and during the bad times you will not be down too much. And it helps to shoulder the losses, so the losses spreads out as well. And by spreading out your investments across different asset classes such as stocks, bonds, or even cash, this can help protect your portfolio from the effects of a bear market. And these days, there are brokers that allow you to purchase different types of assets, and some even have market funds that allows you to earn a pretty good interest on the cash that you're holding. And last but not least, it is to keep a long-term perspective. So it's important to remember that the bear markets are always temporary, and the stock market has always recovered in the past. So although past results are not indicative of the future, the world isn't all doom and gloom. So if you have a long-term investment horizon, try to stay on the course and stay invested. So at the end of the day, the key to navigating a bear market is to stay diversified, stay calm, and keeping a long-term perspective. And by following all these strategies, hopefully we can all weather this storm together and meet at the end of it. So thank you guys so much for watching. We hope that you have found all these tips very helpful to you. It will really be helpful if you could subscribe to the channel for more investing insights. And as always, stay safe, invest safe, and I'll see you in the next one.